First of all, the woman is always right. My grandmother taught me this, so I'm probably wrong. But past that, I think that it is true that banks won't be a big part of the future. The nuance to that is that banks are currently in the midst of transitioning from process organizations, really banks, to being technology companies. And so the question that's interesting to think about over the next 10-year curve is how many of the existing banks like Wells or Goldman or JPM make the conversion into being technology companies. So I very much do agree with the first part of your statement that I don't think banks will be a big part of financial services provision 15 years from now. But I think that a lot of the companies providing those services, a lot of the companies, like technology companies providing those services, will have been banks in their past.
Oh, so banks transform themselves into technology companies. Some of them do call themselves technology companies. You go to a place like Goldman Sachs, they'll say, well, we have 10,000 engineers and 2,000 traders. How does Wells Fargo view this future?
Yeah, I think we completely agree that it's becoming a technology and data-driven business, and so I think to the point that being at the forefront of that, investing in the ways that we make banking faster, easier, safer for our customers, I think we would probably share that priority. I do think because of both the regulatory structure as well as the notion of trust and where people want to trust to put their money, I think we know that that's evolving, and mobile first and technology is enhancing the ability to do that differently. In this environment, we still know there's a role for physical and person-to-person banking, and so I think that we do see an important role, and at least for the foreseeable future, we do believe that technology will continue to transform the banking industry, but it will not eradicate banks, that they perform an incredibly critical function in commercial and consumer worlds, and it's a lot bigger than kind of the movement of money. It's also the management of money and the achievement of financial goals over time.
Yeah, and the market certainly believes that. So,
yeah.
So when we look at the market capitalization of Wells Fargo, it must be up there with JP Morgan's largest bank in the country. You're a small company, so the market seems to think that there's still a lot of promise in the big banks. They're not yet sure about you. Well, or you're going public, though, at some point.
At some point. I think that there's two things there. The first is that the market is usually right in the short term, but rarely right in the long term. And so if we're talking about a 10 to 15-year horizon, a lot of that capital isn't pricing that in. The second thing is that most of the capital in Wells Fargo or any other bank is in some kind of mutual fund or tracker that's not making an active decision to hold that capital. But stepping back from that sort of like pedantic economist argument, I think that when you look at where the banks are today, they have, as an industry, some of the most horrific NPS scores outside of the airline industry. They're struggling under really terrible cost. Net Promoter Score. There's few entities on earth that have a lower rating in terms of consumer trust and love than banks and the banking industry in general. They're incredibly inefficient on capital right now, and so they're being squeezed on both ends on that front. And then when you think about the market, one of the most valuable companies in the world today is Amazon. Amazon probably has more consumer payment details on file than any bank or combination of the next three big banks combined. And so it's really pretty nuanced across the field.
I have to respond.
Sure.
Only because I think that, look, I would argue first and foremost, it's up to the banks to transform ourselves, right? To make sure that we're at the forefront of meeting people's needs. And look, we started 165 years ago when there was the stagecoach. So I think banks have proven that they can adapt and reinvent themselves, but it's the most important piece of that is putting the consumer at the beginning and middle and end of everything that we do and thinking holistically about that experience. And as long as we continue to innovate for that ultimate customer and experience, I think we'll be fine, because that's ultimately why we're in business. We have 70 million customers. Despite what is a challenging industry and headwinds, we deliver very valuable service to them, and Net Promoter Scores aside, I think we feel like we have pretty deep loyalty, but we have to earn it every day. We earn it through our people, we earn it through technology, we earn it through trust, and all of those are things that we double down on, but we have a heritage of demonstrating that over time, we continue to earn that trust, and we continue to deliver not only for our customers, but for shareholders.
Let me ask you, obviously Wells
Yeah.
Fargo had this fake customer account issue. Not a huge financial blow, but definitely reputationally. And you as the chief marketing officer are in charge of going out there and rebuilding any lost trust and explaining to people what happened. Trust is, I think you both have mentioned it, is at the heart of financial services. What are you doing to sort of win back your customers?
Yeah, I mean, the most important thing is actions, right? And I'd say they fall on two lines. The first is we have to fix and make right what went wrong, and that's what we're doing. So first and foremost is we will be a better bank out of this. There are things that happened, there are things we did that were not in the customer's interest. So that's changed. We've changed incentives, we've done things for our team members. So those are all changing who we are as a bank to be a better bank than our competitors or than we were. And then the other side is we continue to deliver innovations every day that make our customers' lives better and easier. So we've talked about, the cardless ATM, the first bank to do that. People walk out of their house with their phone. They don't want to necessarily carry a card. They can get cash if they need it. Those are the kinds of innovations that we know are important to our customers and that keep us relevant. So I think that it's both earning trust back in terms of fixing the things that are wrong, but as importantly, innovating to make life easier and better for our customers. And we have the resources to do that.
Now, I mean, how does your business, let's be honest, how do you capitalize on some of the NPS numbers, these kinds of issues, which Wells Fargo is not the only one that's come across these issues. I mean, is there a way to capitalize it? And what do you say? Because this other idea of Bitcoin being a sort of, it's part of the shadowy world, blockchain being a sort of derivative of the shadowy world that people aren't 100% sure they trust either. How do you kind of explain that to your future customers?
So there's only like one small question within that paragraph. So I think that the first thing is to talk about sort of opportunities, and there is a big opportunity that's been created by a lot of the missteps in the banking system. But a lot of our conversation so far today has been really focused on what's happening in the US. And much of the opportunity for technology companies, as well for us, is actually overseas. And so the vast majority of our business is not in the United States. It's in G7 countries, so it's in Latin America, India, a couple of the fast-growing economies in Southeast Asia, China, and then increasingly Europe. There's not, it's a very different market from what's going on here. And payments and payment technology and financial services are evolving much, much faster outside of the US than they are in the US. And so, when you look at customers in China or Southeast Asia, they're very, very different from what they want, what they expect, and quite frankly, what they're open to than consumers here in the US. And so most of the really cool stuff is actually happening overseas.
Why is that?
And that's where most of it is. Well, I think there's two things. First of all is that Americans still live a very America-centric life. There's not a lot of...
You might say America first.
America first. I instantly regret that statement. So that's part of it. We have a huge economy. So this is one of the reasons that WhatsApp took off in Europe before here, is that in Europe you had all this long-distance texting problem, right? Whereas in the States we didn't have long-distance texting, even though texting from California to New York is the equivalent of texting from London to, Greece, right? And so because we have such a big economy here, we have a lot fewer considerations across that spectrum. The other thing is that regulation is a lot lighter overseas. And so the US has an incredibly highly regulated financial services market, which frankly keeps not just fintechs, but also banks from delivering a lot of the more innovative products that customers overseas are enjoying. And so I do view most of the opportunity in the financial services space as outside of the US. Now that said, all the missteps in the global banking system, the great financial crisis that we saw a few years ago, the increased volatility in the world today, all makes people wake up in the morning and question, how is my money being managed? How does my financial services work? How is these services being provided to me? And that creates a huge opportunity for new companies, because anytime people start to question what they have today, you have an opening that you can capitalize on.
But regulation is an interesting point. So there is no Airbnb, there is no Uber of fintech. There's lots of fintech, but it's hard to see anyone out there at the moment, maybe apart from your company, Peter, but that is in a position to disrupt on quite the level and the scale that we've seen in so many other industries. Jamie, is that basically regulation is your friend if you're a big bank?
Yeah,
Is
well,
that
I think regulation as your friend is an interesting concept. But I think, because I think as you said, I think there's always risk in regulation starting to, restrict or constrict innovation, and that's not a good thing. And I do think we do believe that, some areas of lesser regulation would benefit everybody. But that said, I do think in some ways it is to our advantage. I think the other thing, though, I would say to what you were just talking about is, we do believe that there's room for everybody and that we learn a lot from fintechs. We actually partner. We sit very close to Silicon Valley. We partner with a lot of them. And to your point, we learn a lot from what's happening in Europe and around the world. I think that the benefit in some ways of what you just talked about is this expansion that's happening in Europe and this advancement. We get the benefit of learning from and trying to figure out how do we bring that to the United States and to these markets through the traditional banking system.
Right.
I would say that, to come back to your point, this stuff is happening pretty quickly. So we'll do about 30 billion in transactions this year. On a monthly basis, we'll do 2.5 billion. 3 years ago, that number was in the tens of millions. And so it's growing.
But for a big bank like a
But for a big bank, it's relatively
trillion.
trivial. At the same time, one of the most valuable private technology companies in the world today is a fintech. It's called Alipay. They are enormous.
That's true.
We don't talk about them in the West because we don't use Alipay here in the US. Right now they're acquiring MoneyGram, and so we might start talking about them in the US. But they are one of the 5 or 6 most valuable private technology companies in the world.
Right, and Alipay, which is sort of controlled by Jack Ma and Alibaba, of course benefits from a less regulated structure in China than you guys are have to deal with. I think that's right. That there'll be a question of a regulatory arbitrage.
Right.
I think so, but I think also the sort of other reality there is that you didn't have a tradition of consumer financial services in China that exists here.
Right.
And so anytime you're in a market, and we see this every day when we're trying to grow our business, anytime you go into a market and you're extending a service for the very first time, which is often what we're doing, it's very easy to convert people into it. Whereas in the States, you're asking people to switch. And it's actually hard to get people to switch. So new markets are always much more exciting. So China is actually pretty regulated. The PBOC is quite stringent, particularly over the last 2 years. But what's really helped Alipay grow is the fact that they were coming in and saying, hey, for the first time ever, here's a credit product. For the first time ever, here's some insurance, right? So they weren't competing against incumbents. They were coming into entirely new markets. And I think when you are a technology fintech startup or you're thinking about starting a fintech company, the key thing you have to think about is what are the new markets I'm going to go after? Because it's much, much easier than me going out and competing with Wells.
Right.
Well, and part of that, I just what I would add is I think part of that is because there is an ecosystem, even for a consumer, around their financial affairs. And so it's one thing to have a P2P kind of capability, which we now have with Zelle, which is a cross-industry, 85 million customers around the banks for a person-to-person payment. So that's one solution that works. But on the other hand, you have mortgages and you have investing and you have other financial needs. And the P2P, the payment piece of that is a really critical piece. But as people mature, age, develop broader financial needs, there is this ecosystem of how do I manage all my money over time and how do I manage those needs? And I do think that's where quote-unquote traditional banks and or combinations of traditional banks and other capabilities come into play, which is how do these pieces of your puzzle fit together in a way that's easy, convenient, and by the way that you trust, because as your odds and your stakes increase, right, over time, you really want to bet with somebody who's going to be there.
And what's tricky about that is that, right now, you've had basically 2 things happen in the fintech space. One was people building slightly better consumer experiences on the top of the same rails, and that's obviously range bound. There's only so far you can take that. TransferWise is a good example of that. And then you have people that are reinventing sort of the fundamental infrastructure level, which is what we do.
Right.
The problem is you have to build a whole new fundamental infrastructure level, then you have to attract enough volume that you have a real business, and then you need to build the ecosystem of financial services and products that you're talking about. This is a long process.
Right. I mean, it's interesting what you say, this ability to leapfrog existing legacy products or infrastructure. That, of course, raises the question about if you have a lot of it. So, I mean, branches, I'm not, show of hands, who's been at a branch in a bank in the last 2 weeks?
Oh,
Right. Actually, quite a few.
A few,
More than
right? Surprising.
About
but-
10
yeah.
people.
Yeah, 10. That's more than I thought. But no, but
Yeah.
you have got you have this difficulty of trying to leapfrog into that next generation and of services and interfaces at the same time as you've got bricks and mortar and branches and people. And how does that all play
Yeah,
out?
I mean, I don't think we look at it as being burdened as much as being as a value add as long as we can evolve the right way. So I think we look at it as we've announced that we will be closing branches. However, we also know that we monitor and track daily, weekly, monthly usage, and there's no question that people come to the branch for less and different things. On the other hand, when you ask people why they choose to open up, today at least, their primary debit payment account, it's oftentimes because it's the bank that's near me. And part of that is just, legacy, and people want to feel safe. They want to know their money actually physically sits and exists somewhere, and that sign is actually a sign of that. But that's evolving, and so there's no question that we will continue to evolve. We continue to innovate on mobile and digital first, and yet we know that there's an important role that people play, and we'll just continue to make those right shifts. But I think we feel very confident that as we make those shifts, we have significant capacity to invest in the mobile and digital first.
Okay, quick question. How does this whole new idea of deregulation, or, well, today or yesterday, depends every day, depending on the tweet of the day, but there seems to be certainly a sense that we are going to have a slightly deregulated financial services industry relative to the last 8 years. Quickly, where's that? How's that work out for you?
We will see what happens, but I think it's too early to see what the practical impact of any of that will be. The biggest changes that could come down are anything on the consumer protection front, which is a fine line between protecting consumers and keeping the market stable and preventing any new innovative products from coming to the market. We've probably been a little on one side of that for a while.
Right.
This would be interesting to see it shift back, but it's way too early to tell.
Jamie?
Yeah, and I would just say I think we're built to excel in a regulated environment as much as one can, and yet I also think we are going to continue to be a customer champion and advocate for any environment that creates more choice and more success for the customer.
Thank you. That's all we have time for today. Enjoy the rest of Collision. Not too much. Still a bit of work to do still.
Thank you.
Give our panelists a hand.